What's up, guys? John here. Donald Trump has just moved forward with tariffs. 25% tariff on Canada, 25% tariff on Mexico, as well as 10% tariffs on China.
Executive order signed by President Trump today, this time for tariffs on goods from Canada, Mexico, and China.
25% tariff on Mexico, 25% tariff on Canada, 10% tariff on China.
President signing executive orders to hit Canada and Mexico with 25% tariffs and China with 10% tariffs.
Now, this, we're told, is to strengthen the U.S. dollar and to put us back into the driving seat and to, regain control that we have lost over the many years. But what I want to look at is the big story behind this, because I think there's a way bigger story that's not being told that I think will impact all 330 plus million Americans. And I think it's going to restructure and change the world as we know it. If you look at gold prices right now, gold is skyrocketing.
Gold prices set new all-time highs against all major currencies.
And I think in large part because of these tariffs and the uncertainty that's kind of floating around in the world right now. Also, today's video is sponsored by U.S. Gold Mining, but more on that in just a little bit. Now, what I believe these tariffs will do is they will reduce consumption. We will likely see these prices go up, and they will continue to get passed on to consumers. Consumers will then have an option. Do they continue to purchase from the same manufacturer, from the same stores, or do they go to a lower cost provider? I think ultimately this benefits large corporations like Target, Walmart, and Amazon, who will have really a moat around affordability, and consumers in an affordability crisis will have no choice but to downgrade and buy from those that can provide at the lowest prices. So I think this is really going to have an impact on small businesses that are selling premium products. And I think what we're likely going to be looking at is the tip of the iceberg of substantial change. Let's take a look at what has unfolded in California, in New York City, and dozens of other states already throughout America, and the laws in which that are already locked in from now over the next 25 years that I think will have a major impact on the real estate market, a major impact on how we live, transportation, food, energy consumption. So NewYorkCity.gov, Mayor Adams said that he wants to greatly reduce meat consumption and move into a planetary diet because it's better for the environment, and we have to stop wasting water and stop wasting energy. This is on their website, right? Look at California. Gavin Newsom has already said very similar things. We need to move towards a plant-based diet. Energy consumption needs to be reduced, and we need to build in accordance with the new climate, and everything needs to be, we need to change how we live. And also, this is right in line with, with Mayor Adams. I was in Tokyo 6 months ago in a hotel, and they were saying the same exact thing that Gavin Newsom and Mayor Adams are saying. What are the odds of that? Talking about energy consumption, we need to use less energy inside of the hotels. They had low flow toilets and sinks. Everything was I would say, in line with the direction of where we are going here in America. Now, when you look at what these tariffs are doing, everything across the board is towards reducing consumption and moving us into this new world. Then when you start to kind of look at the direction that U.S. consumers are in right now, they're tapped out financially. We got about $9,000 is the average consumer's credit card balance. Pretty substantial. You get the federal government talking about laying off 2 million workers. You have even the federal government saying, look, we'll give you a buyout. We'll give you a buyout, but you have to accept it. And we're not going to give you that much information about it, but you got to accept it. Some are taking it, some are not. You look at Amazon, Kaiser Permanente, you look at Teachers Union, all the big corporations, UAW, all these major strikes that were unfolding. I personally think, if I were a betting man, that these strikes were probably formed from the inside to find a clear, easy way to get rid of these employees without having to pay them major, buyouts and payouts. If they issue a strike and people leave on a strike or they can't come to terms, that's their choice to leave that, that company. But if the company was to fire them, well, that's going to be an expensive journey that these companies would probably prefer to avoid, especially when you're talking about 5, 10, 15, 20 plus thousand employees. That's a big problem, right? And so when you have all of these businesses looking to reduce their exposure, you have the governments around the world talking about we need to reduce consumption. Everything is moving into this new, I would say, new society. And this is also happening around this major shift around AI, which I find very fascinating because AI is going to allow these companies to operate much more efficiently, reduce their expenses, have more data, in which they're going to be able to use to monetize an audience that is already on a financial cliff. They're going to be able to tailor products to these buyers, to their their buyer base at a rate in which they can afford, and be able to likely forecast trends and really scale up their operations and grow their businesses, and do it at an environment where small businesses aren't going to be able to compete with them, right? Small businesses are going to continue to struggle. I would say this is going to be like what happened in 2020 and 2021 on steroids over the next 5 years. Back then, if you were a small business owner, remember they said you should go to Walmart and the big corporations because, they're safe, and the smaller businesses, they should close. I think the same thing is going to be unfolding going forward. These small businesses are going to be struggling financially to compete in this affordability crisis with these tariffs and with these new policies that are going to be coming into play. And large corporations are going to continue to grow, and large corporations are going to continue to move into AI, sourcing data, and finding ways in which they're going to be able to scale up their operations. And in an inflationary environment like what we're walking into, we are going to likely see these large corporations acquiring hard real assets, real estate, land, whatever they can buy. They're going to try to accumulate because they're going to want to get out of the paper. They're going to buy gold, tons of it. Look at central banks buying tons and tons and tons of gold the last several years. They're like a multi-decade high, just accumulating gold. Why? It's because they know governments around the world are going to continue to print tons of money, and they prefer to, be in what they call God's money, right? That's been around for 4,000 or 5,000 years, right? And so you just start to look at this major shift. Consumers can't afford most consumers cannot afford to really live. And so why are they going to continue to produce more and more and more goods to a consumer that could soon be out of a job and likely won't be able to afford what they have to sell anyway, right? It's better for all these companies and these governments around the world to find ways in which they can restructure for the future, which I believe is now. So, I share this information because I believe this is actually, where we're really going. I think that, when you look at, I'm going to pull down the street here. You drive down any street in any city in America, every house, every condo, it's brand new construction. Like brand new, everything was just built, and it seems like everyone was just rich, everyone's making a ton of money, and now many of these people are sitting in homes, they're not going to be able to afford the insurance premiums. You think these tariffs aren't going to impact lumber costs? They're not going to impact concrete and siding and its AC units and all these? No. Tariffs are going to continue to go right on materials. Materials are going to then impact the cost to rebuild these properties, and these insurance companies are going to continue to push prices. I mean, look, this brand new. This one right here, also brand new. All these properties right here, these are all brand new, right? So the insurance premiums are going to continue to go up and up and up as this job market and this economy changes. So I think we're walking into a society where it's going to be based around the have-nots and the have-yachts. So like if you're somebody that is very, very ambitious, my belief, when you look at it's just, everything is new. Literally, everything is new. How does this work out? I think it works out for the person that's very, very motivated, self-driven entrepreneur, investing, sacrificing what they need to sacrifice to put themselves in a strong position financially. Because if you put yourself in a really strong position, when energy and tariffs and all these costs go up, if you're making $100,000 a month, $50,000 a month, you're making a lot of money. You have very little expenses. Is it going to impact you? No, it's probably not going to. But if you're making $2,000 a month, $3,000 a month, and tariffs, the price of household items goes up 30%, 20%, is it going to impact you? Yes, right. And this is what I think is happening. I think there's like a 2 or 3 year window to accumulate assets, to grow wealth, and to isolate yourself from the storm that is coming. That's my genuine belief. I'm not saying this again. I'm not saying this to get anyone concerned. But when you go on government websites, ca.gov and ny.gov, and you look at what they're actually saying, and you start to look at what's happening around the world, it would be foolish to say, I don't like this information that they have on the website, so I'm going to ignore it and pretend like it's not happening. This is actually what's happening. So the cost of everything will likely go up in the short term, and if you're positioned for it, you're going to benefit. And I think when you have large institutions and large companies sitting in so much money and they're getting ready to fire a lot of their workforce, what are these companies going to do? They're going to buy houses. They're going to buy real estate. They're going to buy infrastructure. They're going to control shipping and distribution. They're going to do whatever they have to do to grow their businesses and to grow their wealth and dominance. And if a large share of investors are buying affordable housing and buying real estate, and what are they going to do? They're going to continue to increase rents. Now, the big question, people are going to say, look, John, well, if they're going to do that, how are they going to be able to increase rents if people don't have any jobs? I think that what's going to happen is I think living standards are going to continue to go down. And I think we're going to start seeing more and more roommate situations. I think we're eventually going to start to see a UBI, Universal Basic Income, maybe in the next 2 to 5 years, maybe less than that. They have a lot of different pilot programs all throughout the country. But if that happens, let's say, Sally gets a $2,000 UBI and Joe gets $2,000 UBI, and they have a rental that's $3,500, well, Sally and Joe might have to pitch in, $1,750 each, or maybe they bring in Todd and another person, and they're all pitching in a little bit, and they all live together, and they're all pitching in. The landlord will basically be able to control living standards, and that's what I think is going to happen. I think we're going to see this huge push of investors and institutions in the next couple of years that are going to be driving real estate rental prices up in a big way. So that's the direction I'm seeing. You want to own assets, the right assets. You want to make sure you're out of high interest rate credit card debt. When you see the subject lines of on CNBC, people saying, oh, it's 25% tariffs, I always say the real story is not the headline. The real story is reading between the lines. It's not just, this isn't a big push for America. This is a big push, I believe, for the rich getting richer. Look at Amazon. You look at CEO Jeff Bezos. He's getting real close to Trump, and Zuckerberg, and all these major players. Are all 6 months ago they weren't talking to him. Now they're buddies. It's the rich are about to get a lot richer, right? Position yourself. You don't have to be a millionaire or some centimillionaire, but you might want to position yourself. My advice: if you have a high interest rate credit card debt, try to find a way to do a balance transfer, get out of that credit card debt. And a lot of these credit card companies offer 0% APR balance transfers for 24 months. So if you have $10,000 credit card debt, 24 months, you pay $500-600 a month, you pay no interest, and then you're out of debt. That's a great situation. It's a good deal, right? How they get you is if you don't pay off your balance at the end of that 24 months, then they lock you in some insane interest rate. So just make sure, if you do something like that, you're going to get approved for it. You can look at what the terms and conditions are with the card once you apply for. But you want to make sure you get the right card and make sure you pay off your balance in full. Second is if you have a business, you want to try to, A, make sure you're choosing the right business, and B, make sure you have the right people and the right plan in place to grow and scale that during these times. I think a really good industry right now would be anything that's going to be around affordability, health, happiness, wellness. All those industries are going to, I think, do extremely well, and I think there's going to be a lot of demand for those specific industries in the next couple of years. And then you want to invest money. You want to make sure you're not just renting an apartment from Blackstone or one of these large corporations, or you want to put yourself in a position to where you own your property, ideally outright, or have a very, very, very manageable mortgage. But doing all these things, taking these steps and procedures now, I think will just benefit you. I do think gold is going to do extremely well. On January 20th, President Donald Trump signed an executive order titled Unleashing Alaska's Extraordinary Resource Potential, emphasizing the state's vast untapped energy, timber, seafood, and mineral resources, including gold and copper. While specific mining policies are not out yet, this order signals a pro-business, pro-research development approach. One company well-positioned for this shift is U.S. gold mining, NASDAQ ticker USGO. USGO, the sponsor of today's video. USGO owns Whistler Gold, Copper, Silver Project in Alaska, which reportedly holds 6.5 million ounces of gold, equivalent in indicated resources, and 4.2 million ounces of infrared. At its April 2023 IPO, gold was trading at $1,930 per ounce. Today, it's at an all-time high, and Bank of America now predicts it could hit $3,000 per ounce. A key development, after meeting with President Trump, Alaska Governor Mike Dunleavy visited U.S. GoldMining's Whistler project with CEO Tim Smith.
We will maximize Alaska's mining potential, and we will ensure Alaska gets even more defense investment.
Before joining USGO, Smith worked at Newmont and Goldcorp, where he played a key role in the $520 million Kaminak gold buyout, one of the largest gold acquisitions in the past decade. His expertise in advancing mining projects is exactly why he was brought in to lead USGO. As of September 30th, 2024, USGO holds no debt and holds $4.4 million in cash. Despite these strengths, the stock is trading 40% below its all-time high as of February 1st, 2025. For full details on USGO's Whistler project, check out their filings at sec.gov or cedarplus.ca. This video is sponsored by US GoldMining. But don't just take my word for it. Check out the details by clicking the link below and decide for yourself. I think the world is very just uncertain, and I think we're going to see a lot more chaos. I mean, look at the amount of stories unfolding in the world right now. Every day, it's a new breaking story. Every day. You don't think institutions are looking at that, saying, you know what, maybe we should hedge for some type of black swan event? You know, I think they are. Like even Ray Dalio himself is like, oh yeah, I'm really bullish on gold, right? I think you take the right procedure, the right steps, you'll be okay. If you ignore what's on the government websites, you ignore what they're saying is going to happen, I think it's a mistake. That's it. Like, I think it's a mistake. If it were information from some, you know, random guy on the internet, he's like, oh, this is what the future is going to look like, I'd be like, okay, well, you know, I don't believe the guy. But if it's on the government website, I would say, okay, this is probably what's happening. And then when you see it across 5 or 6 different government websites, you see them everywhere, you're like, okay, I'd be a fool not to take this into serious consideration, right? So that's my 2 cents on it. I do think we're welcoming the greatest wealth transfer in American history, world history, and I think it'll benefit those that are prepared for it. I think betting on affordability is a really smart bet. What do you think about this? You know, let's have a conversation about this below. I just don't see how, like, you drive by this and you see all of these new, like everyone's just rich, right? This is Cleveland. Like these homes, these townhouses are probably $600,000 each, right? But this is just like the new America where everyone just last 5 years, everyone can just afford this. They say 1 in 5 Americans has a car payment north of $1,000 a month. That's crazy. But that is what people signed up for the last couple of years, thinking like, hey, look, all these townhouses, you know, breakwater bluffs, right? Like everything is, that's what the community is called. Everything is just new. People are they just have so much money to spend, right? Everyone locked into these debt commitments the last couple of years. I think it's all going to shake out to benefit the prepared. Let's have a conversation below. And for more information on today's paid sponsor, you can click the link in the description just below this video. I catch you next video.